Welcome to Inside India. I'm Amitod Singh, and these are your headlines. Techs are leading the sell-off in Asia after the roller coaster ride on Wall Street as valuation and rate fears rattle investors once again. Japan markets among the bigger decliners with the yen on intervention watch, and as Prime Minister Takaichi's government prepares its biggest spending package since the pandemic. And Honhai shares are also down sharply in Taiwan as the world's largest contract electronics maker holds its Tech Day. Emily Tan is on the ground.
That's right. Coming to you live from Taipei here. We are waiting for Sam Altman from OpenAI to make an address to address the crowd here after Foxconn and Honhai announced a partnership to make smart factories in the United States. We'll have more coming right up.
And we will also hear from AI-focused Indian IT company Persistent Systems. Does the company have concerns about an AI bubble? All right, let's take a quick look at the markets. It's a market-wide sell-off in Asia, and the immediate focus is obviously going to be on Japan, where the stimulus package to the tune of $135 billion, the largest since the pandemic, could be announced any time now. And comments from the Bank of Japan's Governor Kazuo Ueda also coming in at this point in time with the focus on effectively thinking about rate cuts. Not really a focus. It's going to be about increasing the rates. But take a look at what's happening out there. Nikkei 225 minus 2.35% down. The Kospi minus 3.92%. In Taipei minus 3.28%. But red across the floor. That's what we are seeing. We're going to be watching all that is happening, keeping in mind that the hopes of a December rate cut by the Federal Reserve continue to sink into what's happening in the market. But we want to give you a sense of the US dollar and the Japanese yen too. Given all the attention on Japan today, all of this pushed the yen to a 10-month low of 157.78 per dollar, and a 30-year and 40-year government bond yields to record highs some time back. But at this point in time, what you're looking at is the 157.3, not as high as that. But take a look at this. JGB yields all down, 0.95%, 2 years, 5 years, 1.308%, and the 10 years, 1.78%, and the 20 years, 2.81%. Now, we're watching this very closely. We're going to come back to this in just a bit as we get news from Japan. But let's just give you a sense of what happened in Wall Street, because that's where it all really started. The benchmark S&P 500 closed down 1.6%, and the Dow Jones Industrial Average closed down 0.8% in New York. The tech-focused NASDAQ Composite closed down 2.2%. This is all about that growing bubble, the AI bubble fears around the frenzy which resurfaced on Thursday, less than 24 hours after strong results from chipmaker NVIDIA sparked a rally. But at this point in time, 0.35% up, 0.46% up Dow Jones, and NASDAQ 0.16% up, implied opens out there. But it is a tech stock-led Asia market slide. Now, the Indian markets, how will they react to all of this? There's a lot happening. The Prime Minister heading to the G20 in South Africa. But take a look at what Gift Nifty futures are indicating. 26,207. So it is looking positive. How positive? Well, we are really nearing a record high, given where we were just on Thursday evening, 26,192. Remember, 85 points below its September 2024 peak. That's where Nifty is at. Now, analysts anticipate continued upward momentum driven by domestic factors, global data, FII inflows, and of course, that potential India-US trade agreement. We're watching this very closely. There's a lot happening. We'll come back to this. Now, our focus today, at this point in time, before we shift to Japan, is on AI and tech. India's big IT players are really making massive bets. TCS has just announced a $2 billion joint venture with private equity firm TPG to build AI data centers. And this comes after the company cut about 2% of its workforce to realign for AI. It's not alone, though. AI-driven restructuring continues industry-wide. Infosys and Wipro removed more than 25,000 jobs each in FY24. Tech Mahindra cut over 10,600 jobs, citing portfolio rebalancing. HCL Tech let go of 8,000 plus employees, mostly after divestments and tech realignment. So what does this mean for India's tech job market, and which skills will matter next? For that question, we have Sandeep Kalra. He is the CEO of Persistent Systems. Sandeep, thanks so much for joining us. It is a big day. It's Friday. We thought it would be lighter, but it isn't. It's big. I want to just get an answer from you on that question about upskilling, about AI, the bubble, whether we are in a bubble or not. We're hearing so many different things. What's your position on this?
So see, the bubble that we all are talking about is about the valuations. I don't think it is about the AI part being real. I definitely think the AI momentum is real. We are in a very early innings of this whole, percolation of AI into enterprises, into the way we do business, and so on. When we look at our customers, they have all been doing proof of concept. Some of them are going big. So this is going to be a multi-quarter, multi-year journey. So it's not about the market, the addressable market not being there. Now, as far as the valuations are concerned, markets are the best judge. Whether the NVIDIA valuation or other valuations are the right valuations at this point in time or not, we'll let that be the market, place. Now, as far as AI and the entire reskilling is concerned, obviously, the way generative AI and AI at large work, and they are getting infused into every part of business that we do, whether we are a tech services firm, whether you are an enterprise in healthcare, in financial services, and so on. So the amount of reskilling, the workforce transformation, that is real. And that is one of the biggest investments, whether we as a tech services firm as Persistent are doing, or whether India as a nation needs to do. So I'll take a pause. And
yeah, thanks. I appreciate that pause. It was much needed. In just a few minutes, perhaps we could hear Sam Altman of OpenAI speak, and we'll be moving to that for sure. But you said, well, in a way, you're kind of playing down the whole bubble talk. But I want to ask you, I don't know if you heard in the last couple of hours, there was Ray Dalio who said that we're at 80% of an AI bubble. How do you respond to that?
Yeah, so look, the bubble part, all we are trying to figure out is, if you look at even Sundar Pichai or any of the other people, when the internet boom came, there were a lot of investments.
I apologize, Sandeep. We're just going to have to go across to Sam Altman. He is speaking. Sure. Let's just cut across to that.
Sure.
Thank you, Sam, and thank you, Andy, for joining Foxconn to make this exciting announcement. Thank you for your collaboration, and thank you for your visionary leadership to the future.
All right. We might have missed it because it was a short part. We are coming back to you. You were saying, continue.
Steve, and even the internet related, the so-called bubble burst in 1999, 2000s. There were a lot of investments that were done. Did they fundamentally change the way the industry works today? If that had not happened, if the investments had not happened, today the Ubers of this world, the Airbnbs of this world, many other things would not exist. So we are not saying that all the investments that are going in will succeed. All we are trying to say is this. There is maybe a bubble from a valuation perspective. As far as the market is concerned, it's an initial stage of adoption. Will it take a few quarters and several years to kind of get to the place where everyone, all enterprises, etc., will consume the technology? That's the way we are looking at it. We are not looking at it as a big market in the next quarter, next to next quarter. It's a multi-year journey, and the valuations may correct. That may be the right thing to do, but the market exists.
All right. You were talking about skilling. You were talking about the job market. It will transform. Give us a sense of that. Quantify that for us over the next 1, 3, and 5 years, both in India and for Indians abroad.
Sure. So if you look at the India part of it and Indians abroad, one of the biggest sectors for India in terms of technology that will get impacted is obviously the tech services sector. The tech services sector is one of the biggest employers in India and one of the biggest contributors to the GDP. Now, having said that, if you look at various parts of the market, at the bottom level is the BPO, KPO kind of, companies or the skill sets. They are the ones that will get impacted the most. And even there is a way that you can use technology, adopt technology to, automate a number of things, add more value to your customers, and maybe, conserve some amount of jobs with reskilling. But if you move up the tech stack, if you look at even the companies like the NVIDIAs of this world, the OpenAI, Sam Altman that you talked about, the Microsoft, the Google, all of them are investing big time in developing technology in India. As long as we can transform our workforce, to adopt to the latest technologies.
But
There's
Sandeep,
enough and
isn't
more
that the
jobs that are
primary challenge? Isn't that the primary challenge? How do we transform our workforce when investment is not coming in right now? Some numbers for us. India crossed 20 billion according to estimates in AI investing. The US is at 471 billion in the last decade and just 109 in the last year. And China has done 120 billion in the last 10 years. And these are not even updated numbers. You have the government really going out there. An official from the Ministry of Electronics just a couple of days ago effectively said that we need the industry to put in the capital. The government alone can't do it. The industry is unlikely to do it at this point in time. There are no indications really. Yeah, we've had a deal today announced, but we're not seeing the numbers that we need for that upskilling. So I want to ask you, would you put your money where your mouth is? Would you tell us whether you or Persistent would invest?
Yeah, so absolutely. So let's peel the onion a little deeper. I'll come to Persistent as well. So if you look at any of these bigger investments that are happening, where are the biggest GCCs being set up? There are about 2,000 GCCs in India, the global capability centers, and these range right from the Amazon to Microsoft to Google to the OpenAIs of this world to the NVIDIAs of this world. While they do the investment announcements are done at a bigger level. Part of that investment is also flowing into places like India, into their own capability centers. Now let's come to the tech services sector. When you look at a Persistent of this world, we have invested heavily in upskilling our workforce. Out of the 26,000 people that we have, 16,000 are advanced trained on AI. We have been working on it for the last 2 years. We have also developed our own platform using open source technologies and otherwise for doing software development lifecycle. And so whether it is us or whether it is a bigger company like a TCS wanting to invest in even setting up data centers, forget tech services. And they've announced a $1 billion investment from TPG in setting up data centers. So the momentum is on. And I'm pretty reasonably sure India will reinvent itself, and so will the tech services workforce in India and tech services companies in India.
Sorry, just to clarify, you talked about Persistent internally making a change and investing in this. But I want to understand your capital that you're going to put into India's growth, India's AI growth. Is that any different, or is that the same thing? You calculate it as the same thing? I don't know.
Yeah, so if you look at it, India as a overall superset, there are multiple pockets in it. Persistent belongs to the tech services firms. We are the 7th largest in market cap, 9th largest in size. So when we talk about reinventing our workforce, that's an investment going back into India itself. If you look at it, the workforce that works in India creates GDP for India. And that also spawns off the downstream work in India as well. So it's both addressing the global market, using Indian talent, Indian workforce, and similarly the global workforce.
All right, okay. I want to just come to one other aspect of this, because we're getting this question from a lot of people, the state of India's AI trade. Because it's one thing to understand that investments will take time, but it's another thing to understand why is it that India is not really that big a part of the AI trade conversation as perhaps, let's say, other parts of Asia. So how do we correct that, and how do you look at that?
Okay, so I think one has to again go a few layers deep. The AI trade is not one AI trade. AI trade is a trade at an infrastructure level, at the chip level. It is a trade at building the fundamental technologies like an LLM of this world, or it is at the application layer using all of these things for solving business problems in the real world. Now, is India going to be the next NVIDIA producer tomorrow? Not necessarily in terms of a domestic company coming in, investing big time in creating an NVIDIA kind of a chip, right, environment. Now, where India is best at, and even if you were to historically look at it, India didn't make Intel processors, but India was very good in IT. So where we are very good at is using the technologies that are available to us, but building the business intelligence on top of it. We are the house to the biggest GCCs in the world. We are the tech services capital of the world. And that's where we should understand where our strength today is while we build the other strengths in the future to come.
Okay, we're going to bring up some data. And you can comment on this because this is fascinating. And this is why we've got you on, all right?
Sure.
This is about Persistent. Big IT players in India, they're down. And we'll bring up the numbers, you'll see them. But you, Persistent, are up 10% in the past 1 year. What's the trade secret that you aren't sharing that you, of course, will be willing to share right here on CNBC?
Sure. So why don't you bring up the data and I can talk through it?
Yeah, no, we're talking about
Sure.
the big boys, right? The ones that are considered the majors, right? That they are down effectively. You're up 10%. There's another company in the mid-tier range like yours that is also up, in fact, up more than you. So they're also doing something interesting. But you've been doing this for now 22 quarters consecutively. That is fascinating. So what is it that you're doing different effectively?
Sure. So you got the data points right. 22 sequential quarters of revenue growth and profit at the same level or better. Now, what is powering all this is the investments in forward-looking technologies. It's basically, the capability build that we have done, whether it was the cloud. If you look at the Gartner Magic Quadrant, we are right up there as a challenger to some of the biggest firms with better execution capabilities than many of these firms, whether it is Indian or it is US-based or European-based. Similarly, when it comes to generative AI, data and AI-related technologies, we have invested ahead of the curve. Our customers understand it. We are able to cultivate our customers, newer customers, and grow them into bigger customers, and similarly, the older customers. So it's all about capability, execution skills, being agile, and partnering with the right folks, whether it is a Microsoft, Google, NVIDIA of this world, Amazon, IBM, Salesforce, and others.
Okay, that's a lot of business talk. That's not revealing a trade secret. So I'm going to push you on this. We're showing that data now, by the way. TCS down 22%, HCL down 10%, TEML down 14%, Wipro down 11.6%, but Persistent up 10.92%. So come on, give us more than that.
Sure. So the more interesting data point, Amitoj, would have been if you had the 5-year curve, and it would have shown a 1,000%, total shareholder return versus 50 to 75% of the large caps. But I live with this. At the end of the day, it is understanding your customer. It is understanding where technology is going, where the puck is going in both the terms, bringing the best of technology to your customers, executing impeccably, giving them the experience, which is bar none. That is the simple secret sauce.
Okay. Well, I still doubt that that's the secret sauce, but I appreciate you making an attempt at telling us what it is. Okay, just break it down for us, because 80% of revenue is coming from North America, including the US, for Persistent, and growth prospects in India based on that, might raise questions. How does one balance the India, EU, and US growth plan?
Yeah. So look, 80% of the revenue is coming from the US. If you look at the biggest market for tech services in the world, US is the biggest market. Having said that, we have very clearly said we want to expand and rebalance a little bit in terms of the European footprint, and we are working on it. But the customer base that we have in the US, for example, we work with 7 of the top 10 technology companies. We work with some of the largest healthcare, largest financial services companies. And please keep in mind, we are a very small company. We are only $1.6 billion on a run rate basis in a much bigger market. So the propensity to grow in the US with existing and newer customers can take us far. On top of it, we will try and rebalance in Europe with some acquisitions or otherwise.
Okay, but I'm going to quote you from a previous interview, and that's my final question. You said, our time has come to take market share from big peers and mid-tier peers. That's the focus. Tell us how you plan to do that, by when you plan to do that. And also, you previously suggested, I think it was a $2 billion target. But can you, and I know that this is not forward-looking guidance, so don't worry about that. But just give us a sense of what is your next ambition, what is your next target?
Sure. So if you look at our last quarter, we delivered $406 million plus. Now, if you look at the growth rate that we have, we are growing at roughly about 18% year on year. If you compound the growth based on our current growth, we said $2 billion by FY27, which in Indian parlance means March 2027. We are well on that path. With a small tuck-in acquisition, we'll be smoothly over it. And we are fairly confident of getting to that level. Obviously, this is an aspiration. This is not a forward-looking guidance. Now, on top of it, if you look at our longer range, and let me even go historical, because you quoted a data point there. If you look at the confidence where it is coming from, if you look at the last 16 quarters CQGR, we have outperformed the industry by at least 300 basis points, if not more. If you look at the last...
Yes, well, just give us a sense of acquisitions factoring into the same conversation. What's the future for that?
Sure. Yeah, so we are at any point in time looking for acquisitions which are capability-led acquisitions. So these would be tuck-in acquisitions in the North American market, either in the domain of healthcare, life sciences, or banking, financial services, coupled with data and AI would be ideal. And in Europe, we are looking at a scaled acquisition where we can, basically move the needle fairly from the 8%, 8.5% revenue mark to a 12 to 15% revenue mark over the next several years.
All right, Sandeep, this has been a wonderful conversation. Thank you for taking all the questions with the best spirit. We really do appreciate it. I'm sure we're going to come back to you when you achieve that target. Thanks so much for coming on CNBC. All right, now let's head out to the Hon Hai Tech Day in Taipei to keep that AI conversation going. Emily Tan has been getting all the news flow from there, and she's sitting with a very special guest. Emily, we missed what Sam Altman said, and I'm very disappointed about that.
Yeah, we'll try to bring that to you in a little bit. Amitaj, it's good to see you. And we're here at Hon Hai Tech Day. And right now we're listening to the various partner dialogues on stage. And a short time ago, we had Sam Altman from OpenAI discussing the partnership that they announced with Hon Hai. And just to recap briefly here, talking about the partnership, strengthening the supply chain to meet current and future demand, that AI is bringing value to the world with huge potential, he says. With new AI models, we need new infrastructure to push AI development. We need new AI infrastructure on a large scale. And with that, OpenAI is partnering up with Hon Hai. They're going to be giving them the design know-how so that Foxconn can be delivering and making these AI factories in their own facilities in the United States. So they're boosting American manufacturing as well with this latest partnership. So there's a lot of headlines being made, deals being announced. We also heard from Intrinsic, and there was an announcement from IBM just a short time ago, and Hans Decker, he is the general manager of APAC at IBM and joins me now. Hans, very nice to see you. Good morning. And we're very excited to have you here because you just came from the stage. Could you just share with us, I know this is your first time at Hon Hai Tech Day, what was the big announcement and why did you need to be here?
So first of all, it's great to be here. I mean, look at the buzz, the amount of people that are here, it's great to see. For us, it's all about partnerships because if you look at technology and you bring all of this technology to the enterprise, integrating that, you can't do it alone. And this is why partnerships, Foxconn and others, are so important to bring AI to the market, to the enterprise, and put it at scale, basically.
So I saw one of the headlines talking about making AI factories in Taiwan. What is IBM's role there?
So in the end, IBM provides an integrated stack of technologies, from infrastructure to data to automation to AI models to also the orchestration of it. That integrated together with Foxconn to a market locally in Asia Pacific, in Taiwan, but also in other places, is what we're intending to do together. And a lot of this will be use case based. So multiple use cases, bring it to market and have value and have clients basically extract ultimate value from it.
Now, one of the big deals was also OpenAI and what Sam Altman had to say with Foxconn. Young Liu, I got a chance to speak to him, and he said that this is the first of many announcements to be made with OpenAI. They're going to be building out AI infrastructure in the United States. Now, this is the world's largest manufacturer of AI servers. They command 40% market share, Hon Hai. How significant is this announcement?
I think it's significant. Listen, when you look at AI models, there will be a place for very big models like OpenAI, likely in the world 10 to 12. But there's also a space for small domain-specific models. And there you need very specific infrastructure, you need very specialized models to basically protect and scale AI for enterprises. And this is where IBM plays a significant role because we help enterprises create these domain-specific models and help them extract maximum value from it.
Hans, we're here in Taiwan and we're watching the AI build out over the United States. It was declared that this is the AI hardware epicenter of the world. What trends are you seeing on this side of the world?
I think there's a lot happening in the world, as we all know. What I see a lot in Asia Pacific is the need for independence. Independence of technology, independence and reliance on outside vendors. So a lot of companies today are taking back, we would call it control, and they want flexibility. And this is where IBM is helping them. Protect their data, your data is your data. We help scale clients' AI and do it in such a way that they are in control. So I see a lot of independence and the need for independence and sovereignty, and that is going to be two very, very big topics here in Asia Pacific for every country, for every enterprise, for every government.
I'm glad you brought that up. When you talk about the sovereignty for AI data, in the United States, it's very much private sector led. When we talk about Asia, which country is leading in this way in sovereign AI?
I think, first of all, sovereign AI and sovereignty, I think, is being understood better and better in boardrooms and in governments. You've got countries like Singapore, but also Malaysia, Indonesia, they're all introducing legislation that helps guide this narrative. But I believe a lot of this narrative is also owned by the enterprise. And enterprises are seeing and waking up that their data is their intellectual property. The same is what will happen on their AI models. Their AI models are their property. They should own it, capitalize on it, and then add value to their clients. And this is where, again, we as a company are helping them succeed there.
So is there the proper balance or a good balance to have between private and sovereign AI data?
I think so. I think the balance is what we all need to work towards. Governing it, I think, is a very big topic that again we're helping clients with. So yeah, I see a bright future there in each of these countries and each of these enterprises.
And we're also talking about comparing, contrasting open versus closed.
Right.
The United States is very much closed, whereas in China we often talk about the open AI large language models that they are using. Is it possible to have both? Which is better?
There is no better. We as a company believe in open. We are an open source company because we believe that when things are open, when things are transparent, you can quickly react to things that are maybe not as good as you want it to be. So open source models, open source software are topics that are very, very close to our heart, and we think that openness inspires actually a lot of innovation. And in Asia Pacific specifically, open source is core at many, many enterprises, and I believe that open source is the future.
In terms of open source, is it also more affordable that way? The fact that people can share from it, build on top of it, and it can be used by various parties. Because one huge topic in the market now is the affordability of AI and the potential bubble that we're seeing in it.
So first, open source. I think open is actually the way to innovate. You'll get better scales, you get bigger communities working on the same topics. So I believe you can go much faster in open source. Then if you look at cost, we and recently our chairman said that AI is still 100 times too expensive. It's coming down fast. Smaller models, we have different vendors introducing new techniques, we got faster infrastructures. The cost of AI will come down dramatically in the years ahead so that AI can be adopted by everyone, basically.
I'm glad you're talking about cost because we're also looking at circular financing as one of the themes that are being discussed in the market. Billions, hundreds of billions being pumped into artificial intelligence. How would you rate the affordability of AI for corporates and for governments?
So affordability will be okay. Yes, on the high-end models, to train the big models, you need significant amounts of infrastructure still. But when you look at the cost efficiency of small models, and this is why they're so focused, it's all about inferencing. How can you make a model better? How can you train them? How can you extract maximum data? When you keep the models small, you can go very, very fast and very, very cost efficient. And again, this is where the enterprise is embracing these open source models. These open models will extract tremendous amount of value at the right cost rate.
Now, as we are really at the infancy stage of artificial intelligence, would you agree with that? What are you looking out for in the next 5-10 years?
It's going very, very fast. We've seen rack use cases first. Now the value creation that is happening with AI is phenomenal. Us as an IBM company, over 170 countries big, we operate in, we applied this technology to ourselves, so we call ourselves Client Zero. We've been able to extract and gain productivity gains of $4.5 billion of cost. We've been able to realize applying this technology to ourselves, automating 70 workflows across our company, and that is showing tremendous value to us as a company, and we're bringing all of this experience now to our clients in the region.
Hans, thank you very much for joining us today and sharing your experience with AI. And of course, enjoy Hon Hai Tech Day.
Thank you.
We've been speaking with Hans Dekkers from IBM and of course, Sam Altman by video address earlier, talking about the partnership that they announced this morning with Hon Hai. Let's listen in on what he had to say.
They'll require new and more hardware to support them. New racks, new cooling, power systems, and more, and a strong supply chain behind all of it. To keep pushing the frontier, we need to build these new types of AI infrastructure hardware at scale and I'm excited for that to happen in the US and with Foxconn. Foxconn's experience building complex infrastructure and hardware at massive scale makes them the ideal partner for this, and I'm looking forward to exploring together what this can look like. We'll share insight into emerging hardware needs across the AI industry, and Foxconn will use that to design and prototype new equipment that can be manufactured in America. The hardware that powers advanced AI infrastructure will play an important role in ensuring this technology is widely accessible and benefits all of humanity.
Sam Altman there, delivering by video address to Hon Hai Tech Day, talking about the partnership with Hon Hai here. They're cooperating in a data center development in the United States. So Altman and OpenAI will be offering the design insights for Foxconn to be manufacturing and building out their AI infrastructure in the United States. And this, of course, furthering the U.S. building out of AI infrastructure. So the latest coming through from Sam Altman there, one of the many deals and partnerships that are being announced at Hon Hai Tech Day. We also heard from Intrinsic, IBM just a short time ago. We're going to be continuing to watch all the developments here. They have yet to roll out a new model EV here. I can't leak which model it is because I know and I don't want to leak it out, but it's going to be coming out on stage shortly. So there's lots more coming to you. I'm Taj from Hon Hai Tech Day, and we'll be back.
All right. Emily, I'm going to do one thing which is very simple. We're going to continue to track markets here in Asia as we await that bazooka, and I can't believe I'm using that word, bazooka stimulus announcement in Japan. But while we take that break and you stay tuned, Emily and I are going to figure out what that number was. Welcome back. This is Inside India. We're counting down to the market open in India. Just a couple of minutes, 11 minutes to go. GIFT Nifty futures indicating it's going to be positive, but muted. And Nifty 50 really finishing off the day on Thursday at 26,192, which is relatively positive, given that it's been a bit up and down. It had 6 days of going down, 4 days of going up. And at this point in time, it's not too far away from its record high from September of 2024. The US dollar to the Indian rupee, that relationship How will that change? The rupee slightly stronger is what is being indicated and has been since yesterday. But that could change. There's a lot happening with the Wall Street stocks dipping, and also in Japan, big announcements awaited. We'll be coming to that as Prime Minister Takaichi's government prepares a spending package worth trillions of yen. CNBC's Kauri and Joji is keeping track of this from Tokyo. Kauri, tell us about that stimulus.
Well, it's been about 1 month since Sanai Takaichi entered the prime minister's residence. And this is the first chance that investors are going to see what she means by the so-called responsible expansionary fiscal policy. Now, the expectation is that this is going to be a huge economic stimulus package that the cabinet will rubber stamp later on this afternoon before the prime minister heads out and flies out to the G20 in South Africa. Now, so we understand that if it's beyond 21 trillion yen, yes, it's going to be a huge economic stimulus package to the tune we haven't seen since the COVID crisis. What investors, in particular the financial markets, have been worried about all week is the responsible part of her slogan. How much is going to be covered by new debt issuance? And this is a big deal for Japan because it has a huge debt to GDP ratio. Now, it will have to be accompanied by a supplementary budget of some sort. If we're talking in the range of, say, 17 to 18 billion yen, that would be much higher, nearly 35 to 40% higher than the last economic stimulus package last fall. So this is her way of saying, I have arrived, and this is why investors have been very nervous.
You know, Japan's CPI hit 3% exports. The exports are also down. But from what we can see behind you, it looks like Tokyo is, shopping. It's bustling.
It's hopping. I mean, 3% is inflation. And these are the numbers we got for October. This is worrying because it's back above 3%. It's well above the 2% Bank of Japan target, and it has been for 3 years. And it is hopping here. This is Ginza, which is retail heaven in Tokyo. And the reason why I want to mention this is because tourism is now a big component of Japanese GDP. You've heard the rhetoric between Beijing and Tokyo, because Takaichi waded into the territory of Taiwan. Usually, prime ministers avoid going into that, whether she misspoke or something else, we don't know. But she deviated from strategic ambiguity, and Beijing came out and said a number of things, including don't visit Japan. This would be a problem if it really happens. I mean, right now, Friday afternoon, it definitely does not feel like it here, but a record number of people are coming to Japan, about 4 million every month. And about 25% come from China. And if that is not the case, then the retailers are going to feel the pinch. And I think some of the smaller retailers in particular, hotels are worried in the outlying areas outside of Tokyo, because a lot of people are return visitors as well. So I think it's ironic that here Sanai Takaichi is about to rubber stamp a huge economic stimulus package, but on the diplomatic front, she faces headwinds that she did not anticipate going into this job.
And talking about that, diplomatic front, it sounds like it was a short-lived honeymoon after Takaichi hosted Trump and met with leaders at APEC.
Yep. I mean, she came into this job. U.S. President Trump came. By all accounts, it went well. She went to APEC. She met with the Chinese leader. But now that she's headed to the G20 in South Africa, Beijing has said we are not going to hold a bilateral meeting. Now, to be fair, the diplomat from Japan has been in Beijing to try and calm the waters, so to speak. But I think there is a little bit of lingering concern because we've been down this road before, about 10 years ago, a little bit more than that, when Japan moved to nationalize the disputed islands, and it resulted in a 2.5-year hiatus between China and Japan. The real worry, I think, now is, yes, tourism is a worry. If students don't come here, it's a worry. But does it escalate further into key areas like rare earths? And we've seen this story play out so many times this year. Japan has diversified over the years because they've been in that boat before. But still, 60% of the rare earths that Japan needs roughly still comes from China. Weaponization would be a critical blow to the Japanese economy. So, we are in early stages of these discussions diplomatically. But I think for Takaichi, this honeymoon period is quickly ending.
All right, thanks so much for that. We'll be coming back to you as and when there's that announcement. Much appreciated. Let's just now talk more about this with Brian Stutland. He's the portfolio manager at Equity Armor Investments. Thanks so much for joining us, Brian. I really appreciate it. I just want to first get your overview, zoomed out, from Chicago, where you're joining us, idea on what's happening in Japan, the stimulus package announcement coming anytime now. What is going on in terms of the minds of traders?
Well, I mean, look, there's a lot of geopolitical stuff going on, Japan being one of them, the dollar-yen trade getting a little shaky, leading to some levels of volatility in the marketplace, and we're seeing that trickle down all the way into the equity markets here in the United States. So, getting some of that under control overseas is having some effect on our markets as well, but there's lots of other volatility out there across the board, across the geopolitical world right now that is sort of creating some of this volatility, Bitcoin being one of them. I mean, look at that. That thing's trading down at 85,000 now. Obviously, people leading to selling there. So lots of volatility that we saw here today in the markets earlier today.
I just want to ask you this because this is a question that was asked recently, and there was one clear answer. Is there any reason to buy JGBs right now?
That's a tough call. Like, I mean, when you take a look at it, obviously, when we're having lots of volatility, when we see the VIX, the volatility index here on the S&P 500, reaching the mid-20s, that has a ripple effect everywhere. And certainly it makes it difficult for any buyers really to come in the marketplace at this time.
All right, we are getting information. We just want to wait before we confirm it. Just give us a minute. In the meantime, can you just tell us, when it comes to the stimulus package, it's almost at the levels of what happened in the pandemic from Japan. How does the global market, particularly Wall Street, react to this, or has it already reacted?
I think you've seen some reaction already occurring basically in this month as sort of the dollar-yen trade unwinding. When you see yields on JGB, the 10-year there reaching levels that it's reached, you start to see this unwind that happens in the equity markets, that this cost to borrow or carry trade that people have on becomes more expensive, and then there's this unwind that occurs. So certainly a big stimulus package coming down the pipeline out of Japan would maybe help, shore this up and help, keep those yields somewhat suppressed, which the rest of the stock market kind of likes.
All right. The stock market wants that, but what about the central bank in Japan?
Well, I mean, look, this has been, central banks across the world, right? The thing has been print money to get yourself out of trouble. We've seen it here in the United States. We've seen debts increase globally across the board, which has made fiat currency maybe a little worth less. That's why we saw such a big flow into Bitcoin, into gold throughout this year. So certainly, that is like the way to get out of it, right? Is you go ahead, you kind of print money and you provide some liquidity into the system, and that shores things up. Now, that's continued to work over the last 20 years. We'll see if that can happen again.
Does the yen once again test that 160 level against the US dollar, according to you?
When you look at some of the technicals here, it looks like it really does want to. I mean, it formed a nice, what with technical traders like we call a head and shoulders bottom, and it had a breakout. That 160 level probably is about the target. If we get a big enough stimulus package, though, maybe that holds the charge in it.
And we have heard the Bank of Japan board member, Junko Koeda, he told reporters on Thursday itself that the bank was ready to step in if required, particularly with yields.
Well, certainly in the United States, we've been a little sluggish at lowering interest rates. The Fed has given some indication that they're not going to do that come December, probably. And so, others have sort of taken that lead. But here, Japan is sort of seeing a liquidity crisis to some degree. I wouldn't call it a crisis, so to speak, but an issue that they may have to address, and they may have to act out of the realm of the rest of the world and do some things to shore up some liquidity. So I think that's probably coming.
All right. How much of the China-Japan tension is a crisis, both diplomatically and economically, potentially going to impact everything that goes on despite the stimulus?
Yeah, I think, listen, that is certainly having an effect on volatility. That's one of the geopolitical things I'm talking about is is you have some tension here, right? Japan has said, we're going to do everything we can to make sure Taiwan, has their freedom. And China hasn't really liked that, right? And they're sort of testing the waters, pun intended, really, outside of Taiwan. So that tension, if that continues to build, that's an issue that people should be worried about. I'm not sure it gets to a point where, people are shooting at each other, there's fighting or whatever, but certainly that geopolitical tension there is having an effect. We saw China now slap tariffs on Japan. And so obviously that being negative towards the global markets is having effect on this. And so, one person, changes their mind on it, maybe things reverse itself, but certainly, things are on shaky waters right now.
We're getting a lot of reports on research, or some research indicating, and I want to quote what it says, that Beijing is reportedly insisting on a retraction from Takaichi. And this crisis, whether it's going to be protracted or short-lived, is effectively going to depend on China, how much they want to punish Japan. All right? So I just want to understand from your point of view, will she retract? And if she doesn't retract, where this goes in terms of the stocks?
Look, I think, Japan has kind of found a friend in the U.S., and the U.S. has wanted to take a very strong stand on China, right? And so if we're sort of all kind of aligned together here, I think she continues to sort of take a hard stance. I mean, people are going to have some harsh words. Both sides aren't going to really like it so much. The fact of the matter remains is that, one thing is going to bleed into the other. I don't think anybody wants to see chaos in the markets on both sides. And so at some point, both sides will come to the table, figure out some sort of compromise agreement. But Beijing has to take a strong stand, obviously, against this. This is, something that they've sort of kind of been trying to push the envelope a little bit. And so, we'll see how this plays out here. But I think probably China tends to side with the U.S. side on how they've been applying tariffs and providing a little bit of strength there against and pushback against China. I think that continues to go for Japan's way too.
Okay, so Sanai Takaichi will be headed to the G20 summit this weekend in South Africa. And because this is inside India, I'm going to end this on a question about what does this look like for Indian markets? Historically, there's been a bit of a disconnect between what happens in Japan and India, but there's a global sell-off, in a way, happening. Markets are down across Asia. There's the Wall Street impact of AI valuation bubble concerns. Does India react to this in a big way?
India's been pretty resilient in all of this little bit of a sell-off here that we've seen over the last few weeks. When you look at the Nifty 50 really trading near all-time highs. I guess if you kind of discount it in terms of dollars, maybe not quite near its all-time highs, but certainly an uptrend. If you're a technical trader, it's had like a little bit of a breakout in the most recent weeks here. So India's been pretty resilient in all of this, amazingly. And so, we continue to get good news out of the banks in India in terms of being able to, the lending and the flow of money going around there. So, the stock market there looks to be in good shape, regardless whether the G20 meeting is coming to India or not. What I have noticed, I will say this, though, is ahead of G20 meetings, for whatever reason, the stock market historically does not like all these people meeting with each other for whatever reason. It kind of creates some volatility until that meeting goes through. We see this somewhat release of volatility, but there is a little bit of angst of parties that, maybe don't really like each other sitting down across the table and trying to negotiate some things. So, certainly that's something to watch, what will come out of that. But in terms of the India stock market, I do like it.
Okay, so the market in India has opened. It's down slightly, 29%. I understand that there's a lot of, worries around these kind of summits and G20 meets and multilateral events where the U.S. says, we're not even involved there. Right now, what we are seeing is Nifty 50 down about 0.3%, 0.29% at 26,115. Remember, we're looking at that particular aspect, keeping in mind that in September 2024, we had a record with the Nifty 50. A question for you about Liz Truss. A lot of people in Japan and outside, observers, are really thinking about this moment in Japan as potentially one which could, in some loose way, be compared to Liz Truss's moment in the UK. Would you go so far?
No, I wouldn't say that. I mean, look, when it all comes really down to their interest rate policy, right? Because as interest rates head higher, people unwind that dollar yen trade. That leads and bleeds to volatility. We've seen that time and again. If you look at dollar yen rising and the level of the VIX and volatility here on the S&P 500 and across the global markets, those typically kind of coordinate to each other. So it's really about the interest rate policy that Japan's going to employ here and whether they can inject enough liquidity into the system sort of to calm that trade down. And that's what it's really going to be about.
Okay, Brian, I really appreciate you coming on. That was Brian Stutland from Equity Armor Investments. He came on in short notice. Appreciate that. Thanks so much. All right, a quick short break. We'll be back with everything that's happening. There's Japan, there's Indian markets. Take a look at that. They've opened. We'll bring you perspective after this. Welcome back. Indian markets online now. Take a look. They're tracking the other Asian markets. The Asian markets tracking Wall Street. Concerns about how Japan's stimulus package will really play out. And at the same time, it's interesting to note that for Indians, the focus in terms of sentiment, perhaps disproportionate, is effectively going to be on that trade deal with the US. Developments coming in, a lot of official statements. Donald Trump saying that we're pretty close to a deal, but officially, at this point in time, no announcement. And there's another development really based on that, and it's coming from Reliance. We'll take a quick check on that. The shares of Reliance at this point in time up 0.08%, 0.9%, 0.09%. The company says, and we're talking about it for this reason, that it has completely stopped importing Russian crude oil for its massive Jamnagar refinery. Reliance previously had a long-term deal to buy nearly 500,000 barrels a day from Rosneft, but says it will now fully shift to non-Russian crude. The decision comes as the US and Europe tighten sanctions on Moscow's top oil producers, Rosneft and Lukoil. Those sanctions are effective today. Now remember, the additional 25% US tariffs that India is facing is because of the country's purchases of Russian oil. And tariffs are also part of the discussion at Honhai Tech Day, where Emily Tang is. Emily.
That's right. Amitaj, thank you very much for that. We are at Honhai Tech Day, and I just want to take a look over my shoulder because there is stuff happening on the stage. This is the unveiling of the Model A. This is one of the latest, one of their prototypes that Honhai is making. This is a EV manufacturer. They have a number of car models, some of them even on the road, and you can see them taking to the stage now. So a lot of excitement here as we're looking at the latest in terms of creations coming through from Hon Hai in the form of electric vehicles. And this as the company continues to announce partnerships in artificial intelligence and how they're going to be integrating AI into the cars, well, through robo-taxi. And they're doing that in partnership with Stellantis, Uber, and they're going to be putting artificial intelligence into the Stellantis vehicles and then having Uber to reach all of the various people in order to, of course, the clients, the customers for the robo-taxi services. So we're looking at the unveiling of the Model A here. Now, we know Hon Hai as a contract electronics manufacturer, the maker of the Apple iPhone. And just in the last year, the iPhones started being manufactured in India. So we put the question to Young Liu about the impact of Trump tariffs on the company. This is what he had to say.
I would say the tariff negotiations still ongoing. Okay, so I'm not sure that the 50% will be, the final number. But from our point of view, the trend for regional production is there, and India is a very large, market. They deserve to have their own production, built locally. So no matter what tariff other country put for them, they can use their own local market to support a large enough industry. Right? So from that angle, we think they will. Our investment there will continue, and I think the production, the size or the scale of manufacturing in India will rise. That's for sure. No matter what the tariff eventually will become.
Amitaj, we're coming to you here from Hon Hai Tech Day. It's back to you.
It's a great view behind you. We know. Thanks so much for that. Now, before we go, we leave you with pictures of Donald Trump Jr. Yes, posing for pictures at India's iconic Taj Mahal. Local media says he's expected to attend, of course, it has to be, a wedding during his trip to India. That's all the time we have today on Inside India. Keep watching CNBC. Access Middle East is up next. Thanks again.